care of my partner and my children, and they're good. There are some people that they want the really, really good life. They want to explore, they want the, let's say, la vida loca, they want the really luxury life. So with that, they will know that, okay, this is what I want, then what would take me there? There are some people that they just want peace of mind. Like I said in the first example, they just want peace of mind. They don't want any hassle. They don't want a situation whereby they start looking for maybe money for school fees for their children or maybe emergency. They just want to be comfortable. While there are other set of people, they are the philanthropists. They like to give away. They like to spread money around. They like to give people money and everything. So you have to figure out what you really want in life before you can think of anything about investment or money. Because if you can't figure out what you really want out of life, then you don't even know if you even need more money. Let's be honest, there are some people that are comfortable with 100,000 naira per month in Nigeria. There are some people that they are just okay like that. They don't want much trouble. While there are some people, until they have 5 million naira every month, they are not yet satisfied. And it is good. Everybody has what they want. There are some people that they like traveling, like Ore. There are some people that maybe every holiday or any Easter or summer or winter, they like traveling, going to Spain today, Monaco tomorrow, Dubai next tomorrow. They just want that. And that is not really an issue. Also, why do you want to retire young and rich? Why do you want to retire young and rich? Let me ask Michael. Yeah. Can enjoy my old age today. Gideon.
I think I really want to retire young and rich because coming from where I came from, like I come from a medieval background, and then I don't want my future to look exactly the same way my parents are, and I want my children to be there.
Israel, what about you? Why do you want to retire young and rich?
I don't like stress, actually.
Okay. It's even showing in your dressing. A banker doesn't really like stress, just staying.
I don't like stress, number one. And number two, I think being rich will be a blessing to me in the sense that I have lots of ideas that I just need money to push on.
Okay. Good morning, ma. Yeah, please, we would like you to just do a brief introduction about yourself, your name and what you do. This guy.
Should I stand up?
No, yeah, big woman now, you don't need to stand up. Yeah, okay, like this.
Alright, good morning, everyone. My name is Becky John.
Okay.
Full name is Rebecca, but I prefer being addressed as Becky.
Okay,
I'm
okay.
a missionary with FCS, Fellowship of Christian Students,
Okay,
residing in the north.
okay. Okay, that's okay. Thank you. So the next thing we're talking about is Parkinson's law. I don't know if anyone knows about Parkinson's law. Does anybody know about Parkinson's law? Nah. Yeah, a banker is supposed to have an idea.
Yeah, I have an idea.
Yeah.
So your expense rises as your income rises.
That's just the simple thing. So, yeah, that is Parkinson's disease. That is the shaking part, Parkinson's disease. But Parkinson's law is just like what Israel said in simple terms. Your expenses would always rise to meet your income. So no matter, at the beginning I said that you can be making 100,000 or 2 million naira every month. But if you waste all those 2 million naira, you spend everything, you've not really earned any money at all. So Parkinson's law states that your expense would always rise to meet your income. If maybe you are earning like 200,000 a month, there are some kind of needs that you would be moving around with. By the time you now start earning like maybe 5 million naira a month, you will now discover that the itel phone that you are using that didn't have any issue before you know it now, you now want to buy an iPhone. So money kind of attracts. There's sometimes that maybe you are working or something, maybe there's no money in your pocket, you will not want to buy anything. But maybe you just went to the bank to make a withdrawal, you have 10,000 in your pocket, then you are now walking back home. That's when you will not see granite and you will not be hungry. As you are going to the bank, you are not hungry for granite before. But because you are coming back, there is money, so the money is now attracting everything that you need. Everything, money will always be attracted. So no matter how much you earn, your expenses will always rise to meet your income. So you need to know how to get more income than your expenses. And this Robert Kiyosaki, he talked more about it in simple details when he was giving comparison between his rich dad and his poor dad. For his poor dad, he's always spending and he's actually a teacher and everything. But the rich dad discovered that assets is what would make someone really, really wealthy and have enough. That's why at the beginning I asked that, what do you really want out of life? You need to figure this out yourself, because it's not just about me coming to talk about the stock market to everyone. If you don't really know why you need more money, no matter what I talk about, it will be rubbish to you. No matter what. There's some people that you just say, come and buy stocks, come and invest in stocks, and come and buy stocks and everything. They don't know why they want to buy stocks. They don't, okay, already said I should buy. I'm buying. He has no reason behind buying the stock. So when maybe things don't go his way, he starts to complain because he didn't have any reason why he needs more money. Now, looking at this table, for example, now, if I should try and push this table, it is firm because it has like 4 legs or 3. If it is just 1 leg that this table has, any small shaking, it will fall off, right? Because there's no much foundation like the legs that are making this table. The more legs the table has, the more solid the table is. So it's not just by having one reason that you need more money. The more reasons you have, the better your conviction. So if it is maybe your family background, or you want the comfortable life, or you want to be, there must be multiple reasons why you should need more money. So we're going to the next slide. They were just ranting. At the point I was almost forgiving, let me mess up. Because I posted this thing, you were just on, and it's just caused problem and issues and everything. So you need to have the right mindset towards wealth. If you don't have the right mindset, no matter what you learn about money, no matter what, you to just be like you are pouring water on dog, or is it cat that will just shake everything off. So you need to have the right mindset, because everything begins with the mind. There's this popular saying that everything is created twice. First in the mind, before the reality. This chair that we're seeing, someone had already conceived it in his mind or in her mind that, okay, let us create something like this. Then he brought that reality out to having chair. So you need to discover the billionaire's mindset towards wealth. You can either make money or excuses, but you cannot make both. Occasionally, I do post different things on Twitter and everything, and some people will be complaining that, how will you tell what of those that are earning? Why not leave those people and let them settle things on their own? You focus on yourself. If this is what you want, you would not. That's why I begin this conversation with, what do you really want out of life? So if people are having issues with making the right money decisions, leave them to their issues. You focus on yourself, because that is what really matters. You can't make money and make excuses. Everyone is just making excuses. I cannot do this. It's just 100,000 that I am making. It's just 50,000. Even if you start earning 5 million, if you don't have the right financial mindset, you will lose your money. And that is why no one has ever made good wealth from betting or gambling. Because most gamblers or most bettors, they don't usually have the right mindset. They are not financially intelligent enough. So when they use maybe 100 naira to get 2 million naira, it's more like a massive thing. The next thing, they want to go and wash the money. They start going to either club or something. Before you know it, all the money has fizzled out. But when you have the right mindset towards money, towards wealth, even if 30 million naira enters your account today, you will not shake. You will not shake. In my room, there's I did some money inscriptions in my room. So I assembled 1 million naira Yeah, okay. I'm earning 5 million naira in my account. I already know what to do with the money. By the time 10 million naira enters my account, I already know, because if you don't plan this thing ahead, when this money comes, you will not be able to handle it. It's more like someone putting hot akara on your hand, very, very hot. You will not be able to handle it and you just drop it off. So you need to start making plans that, okay, if 5 million naira enters my account today, what will I do? Because you need to make these plans ahead of time, except if you don't really want much out of life. Can you see why I didn't make any attempt? Okay, thank you. And that is the billionaire's mindset. Every billionaire has lost millions of naira before. Every billionaire has lost millions of naira before. I don't know if you guys occasionally you see a news, whether by Nairametrics or Punch, that you hear that Elon Musk lost $10 billion in a day. You hear that Dangote gained $30 billion in a day. This person lost so many. Every billionaire has lost millions of naira before. Every millionaire has lost thousands of naira before. And it all comes down to risk-taking. Attempting what everybody would not attempt before. Because we somehow think money is by luck, or wealth is by luck. Or we feel that, these billionaires is just by luck that they became. It's not just by luck. They put in the work. They tried something and it failed, and they tried it again. I don't know for how many people that know Clubhouse on iPhone. There's a story that the person that founded Clubhouse, they've tried, like, whether they failed many times before getting to where they are now. And now Clubhouse is valued at over $5 billion or so. Many billionaires have made, they've made mistakes before. Look at Alibaba's story, Jack Ma. He was rejected at KFC, he was sacked, is this. They made attempts and they failed. And that's why it's mostly said that your mentor has failed more times than you would ever fail. And it's all because that is the mindset that they have. That until, it's when I try something that I will know that, okay, I tried it this way, it didn't work. Let me try it again in another way. It didn't work, I will try it again. Eventually it would happen. But nobody will be seeing those trying periods. They'll just say that tomorrow you're already a billionaire or something, like, it is luck, it is grace. I'm a Christian though, but it is not grace. It is not grace. Even the Bible even said that the sun shines on the just and the unjust. If you are an armed robber and you plant corn and you water it as at when due, the corn will germinate. If you're a pastor and you plant that same corn and you water it the same way, it will germinate. And if you are an atheist, that you don't even believe in the existence of God, and you plant that same corn, it will germinate. So there are principles to life. It is not just by luck or grace, there are principles. And that's what we're going to talk about today. Cut small soap for me. It's now becoming more popular. Cut small soap for me. Show me the way. Show your boy the way. That's why I talked about mindset. You need to have the right mindset, because there's something common with Nigerians. They will tell you, show me the way. Show me the way. You will show them the way, they will reject it. They will say either it is scam or it is this. They will reject it. Now, time will come later. Someone that has been putting in the work is now made, or he has already blown. You now start, it's just lucky. It's not luck. If you ask for them to show you the way, this is the way. Like I said, everything is all about principles. Life is all about systems and principles. There's no really, luck can play a part though, because even Tony Elumelu said that he was lucky. Luck can actually play a part, but there's a work that needs to be put in place. So when someone shows you the way, embrace it. And it's all about having the right mindset. If you don't have the right mindset, you will not be able to embrace it. They will cut soap for you, you will throw the soap away. And tomorrow you'll be saying, money no dey Lagos. There is money everywhere. But it begins with the mindset. What do you really want in life? Why do you want to retire young and rich? Because everyone that is here is because, they desire to retire young. Some say that they want to have a better life for their children. Some said they want to improve on the life that they lived before. Some say that they just want peace of mind. So it's very, very important. This is not working again. Please, let me go to the next slide. But than the 99% of human beings combined. It is not just luck or chance. There is something they are doing that the majority of people are not doing. Next slide, yeah. The day you liberate your mind and test after success, like your life depends on it, your life will never remain the same again. Like what she usually say, that I cannot be more zealous for your success than you. I cannot be more zealous for your success than you. You need to want it more for yourself than me. I can just guide you or push you. There's this popular phrase that you can guide a horse to the river, but you cannot force it to drink water. I cannot be more zealous for your success than you. You need to want it more for yourself. So the day your mindset changes, that is when everything changes. It all begins with the mind. Like I gave you an example of the lottery winners. They don't have the right financial mindset. So when this big money comes, they don't know how to handle it. They don't know what to do with it. There are some people that the highest money they've seen in their account is just maybe 50,000 or maybe 100,000. Then they just receive alert 5 million naira. They don't know what to do. Some will even faint and everything. So you need to have the right mindset. The day you liberate your mind and test after success, everything changes. It all begins with the mind. And that's why, like I said previously, what do you really want out of life? When you figure out what you really want out of life, you will know what to do to achieve that. For someone that wants to be traveling around the world for pleasure and enjoyment, the way the person will be serious with life and with success, it will be different from someone that just want to be living life. They would have different mentality. They will have different mindset towards anything, towards money, towards time management, towards principles of life. It will be different. So how to think like a billionaire? You need to have the thought process of a billionaire. Because these guys, like they usually say that Dangote doesn't have 2 heads. Yes, he doesn't have 2 heads. It's the same 24 hours he has that everyone has. The same 2 ears, 2 eyes, everything is the same. But these people's thought patterns are different from the masses. That's why they control more money than everyone else. And that's why they have more results than everyone else. Now, money. The billionaires look for ways to invest money and not spend. That is one of the major differences between the thought patterns of billionaires and for everyone, like the masses generally. Billionaires always think of how to invest money, how to make money, because everything is all about, like I said, it's principles and patterns. You don't need to work for money every time you need money. There's a level you would get to that you would want to do something once and automate it for the rest of your life. That you just work once and it's more like an autopilot, that everything just begins to. Because that is the way billionaires use money to buy time. They use money to buy time. That is why there are some kind of work that some billionaires will not just do. Not like they cannot do it, but they don't have the time. So they set principles, they set systems in place that whether they are around or not, everything works. Whether Femi Otedola goes to the office or not, he's making his money. It's not like he has 2 heads, but he has put systems in place that he doesn't need to show up every time. He doesn't need to work every time before he makes the money. It's all about putting systems in place, and you need money to put systems in place. Dangote is doing his refinery not because he loves refinery. As a matter of fact, the world is moving towards electric, green energy. So he's not doing refinery just for pleasure. If it is pleasure, then maybe Arsenal that he wants to buy, that one is for pleasure. But he's building refinery to make more money. Everything is all about money. So billionaires look for ways to invest money and not to spend. If you are focused on just spending, you would have to work again to make that money. You have to continue working again to make. And there's nothing wrong with working to make money. There's nothing wrong. It's perfectly fine. That is why I asked at the beginning, what do you really want out of life? You can see that almost every point is falling back to that beginning. When you know what you want out of life, even if it's just the little thing, oh well and good, continue working for your money. But if it's like you said, they want peace of mind. You can't have peace of mind if you are working every time for money. You can't have peace of mind. That every Monday morning, there's one post that someone did on Twitter, one popular Twitter person. He said, it is 5:58 in Abuja. People are still on their bed touching their madam, but Lagos people are already jogging for bus and everything. If you want peace of mind, you can't just be working. Like I said, there's nothing wrong with that. It's okay if that is what you want. But if you want the good life, if you want everything life has to offer, you need to know what to do to achieve that. Like me now, there are some countries I just want to visit. There are some countries I just want to visit. Azerbaijan is one of them. I don't know anybody there. I don't have like, all my people, I'm from Lagos. I don't know anybody there, but I just want to visit there. I want to visit Austria. There are so many countries I just want to visit there. I want to see snow with my two eyes, not on TV. I want to do skydiving, scuba. I want to enjoy life. So you need to know what to do to achieve all these things. If you don't want to enjoy life, it is perfectly fine. Everything boils down to what do you really want out of life. Once you figure that out, you will know what to do to achieve that. So in terms of risk, they know that if they don't take risk, they failed. That is one thing billionaires do. They take risk. Not just blind risk that they'll just put their money. Calculated risk. Like I said, it is risk, so it can either work or not. But when you now do the quote-unquote calculated risk, you can mitigate the chances of it not working. So by the time the risk that they've taken eventually works, everybody will be like, this person is a billionaire, he has money. It took the risk that many people would not want to take. You guys being here is a risk. You are risking your money to know more and how to retire young. Eventually, maybe 5 years to come, 10 years to come, everyone here is a multi-millionaire and everything. You're either driving your Benz or your Tesla. Then your old secondary school friend will now like, that my guy, that year, this, show me the way now, show me the boss. But you paid the sacrifice that those people do not want to pay. You now tell them that, I attended the program in Sheraton, 70,000. I say, you spend 70,000, who going to spend that money? The thought patterns are different. And that is because you want more out of life than them. There are some people that are willing to pay the price to achieve what they want. It's very, very important. Now, investing, they realize that investing is the key to abundance. Like I said at the beginning, what do you really want out of life? If you want the abundance out of life, you would know that there's a level you would have your money that you would need to start investing in it, so that the money would be the one working for you. So you don't need to actually go to work before you make more money. You don't need to actually quote-unquote struggle or hustle before you make that money. You have systems in place that, okay, whether I go to work today or not. If Tony Elumelu doesn't go to UBA house in Marina, he's making his money. At times, if we travel to Monaco or this, he's making his money. He has put systems in place. He has taken the risk that he needs to take. He has invested his money the right way. Now he's reaping the rewards. He has a private jet. Everybody wants to enter private jet. But when they now tell you that, okay, this is the price to pay, this is what I did, everybody will be like, can I do that? There's some people that they cannot buy a book of 10,000 naira. As a matter of fact, my book, Stock Market Millionaire, is actually 10,000 naira. There's some people that once they hear that, jackpot, they are looking for a discount or they are looking for 1,000 naira or 2,000 naira. There's no issue with that, but there's a level you reach that you just have to pay the price. And it depends on if you really want more out of life. That's how to think like a billionaire. Now, how to be friends with a billionaire. Now, remember I said at the beginning that in my room, I have like 3 different money portions: 1 millionaire, 5 millionaire, and 10 millionaire. So it is not until when the 10 millionaire enters my account before I know what to do with it. I've already portioned it down. Savings, stocks, real estate, retirement, family, expenses, everything is there. Percentage. So once the 10 millionaire enters now, nothing would happen. I already know what to do. Now, how to be friends with a billionaire? It's not until when you meet a billionaire before you now start thinking, what do I do? Or what do I... As a matter of fact, few months, it was this year, I was at Sheraton with my friend. We were just relaxing, working. Then at the buffet part, at the lunch part, there was one minister, federal government minister there. I saw him with a white man. I knew him because I did my IT in his company before he entered into government. But if I actually want to see that man, I would have to go to Abuja. I will start filing protocols or this. It may take months or even years to even see him. But because I was in the right environment, I saw him. Well, I didn't really, not like I was expecting to see him and I had anything to do with it. So I didn't even go and be like, oh, this is the man there. So these people, you can actually see them at any time, but you need to know how to converse with them. It is very important, except if you don't want more out of life. Because there are some times that something will just link you guys together. So you need to know how to be friends with a billionaire. You need to know what their thought patterns are like. Enter the conversation already going on in their mind. There are things that billionaires are passionate about. And I've figured out that an average billionaire, at least one of these 3 is what they think about. At least one of these 3. Real estate, equity market. Equity is the same thing as stocks. Equity, stocks, and shares are the same thing. And taxation. If you can tell Otedola today that you have the strategy on how he can reduce his taxes by 1 billionaire, he's going to have a conversation with you. If you tell him that you know what to do, that he would pay 1 billion naira less in taxes, he's going to have a conversation with you. Because every billionaire wants to avoid paying much money. As a matter of fact, I think it was last year or so that Jeff Bezos did not pay any dollar in taxes. Not like you just imagine. Some people were there to discuss that, okay, this is what to do to avoid this is what to do. Just a few months ago, many big companies in Silicon Valley in California, they were moving their headquarters to Texas. Not because of anything, but because of taxes. Texas offers low tax compared to California. California is more like let's say, banana land. It's very, very rich and expensive and everything. So they were moving their headquarters to Texas. Not because they are not making money. Not because there's anything wrong, but just because of taxes. Yes, Tesla, they've moved. So many companies are moving just because of taxes. So you know that this is a very important issue. These guys think about this every time. And also the equity market. Every billionaire has their net worth is tied to shares of a company. Either public or private, would go to that. Then real estate. Hardly will you see any billionaire that doesn't have any investments in real estate. Real estate may not be the major part of their income. But out of 5 billionaires, at least 2, you see that they have some investments in real estate. Dangote has, whatever, these people have, because they know what real estate is. So these are what they really think about every time. You cannot really go and meet a billionaire and start discussing about maybe football or this or that. They may have interest in that, but that is just for pleasure. This is what is bringing them the money. This is what they are really focused about. So when you discover what you really want out of life, then you choose your vehicle. Now we're going closer to the main discussion. All I've been talking about is to ensure that we have the right mindset. When you discover what you really want out of life, then you choose your vehicle. Like I said initially that if what you want out of life is the peace of mind and you want to be traveling and enjoy your life, you know that there's a particular amount of money you should be earning to comfortably live that kind of life. But if maybe someone is okay with the 50,000 or 100,000, they know what that they don't really need to, let's say, stress themselves or something. From Lagos to Abuja by road is more than 9 hours or so. By air, it's just barely 1 hour. So if Ore takes God is good to Abuja, maybe by today, this hour, maybe around 11 now, then by 5 o'clock, I take Arik Air to Abuja, I will get there before him. Because I took the faster vehicle. And it has nothing to do with age. There's one of my mentors, Mr. Victor, is going to speak in today. He said retirement is not about age, it's about the numbers. It's not about age. Someone can be 20 and will have retired if the numbers are there. Someone can be 45 and will have retired. And someone can still be working till 60 something and they has retired. So if Ore is maybe 45 years old, for example, and he takes God is good to Abuja, and me I'm maybe 18, and I fly Arik Air to Abuja, I will get there before him. It has nothing to do with age. It has nothing to do with, will I say, expense. I took the right vehicle that shortened the lifespan. So when you discover what you really want out of life, you would choose the vehicle that suits you. Now, what is the stock market and why do people invest in it? Now, we've entered into the main discussion. What is the stock market and why do people invest in it? So let me just ask random. Gideon, what idea do you have about the stock market? Just anything.
I don't really know much about it, but I know it's a form of investment, and then it's another way of making extra income, and you also co-own a company when you buy a share.
Okay. All right, what of you? No idea, nothing at all. Okay, that's good. Gideon has an idea, or doesn't have any idea, so we are going to break it down. Now, like I said, that the stock market, stocks, equity, and shares, they are the same thing. So the stock market is just like a typical market. Maybe you go to Balogu market, you are buying clothes. In Nigerian law, once you have 50 or less shareholders, you are a private company. Shareholders, like 50 or less people own the company. Like we are like 10 or 15 here. So if we decide to, okay, let us have a, will I say, fintech company, for example, now. We want to have a fintech company. Then 15 of us will now decide that, okay, I'll be the co-founder, you'll be the co-founder. We decide, okay, let us form this company. 15 of us gather together, we are the shareholders of the company. It is private because it's only 15 of us, it's just an inner thing. But if we now decide that, okay, for example, we are making 100, I'm sorry, but I'll be using dollars because that's the main focus of. So if we are making, if our fintech company is making $100 million per year, and maybe we've already expanded throughout Nigeria, and we decide that, okay, let us go further beyond Nigeria. Let us go to Ghana, Rwanda, and South Africa. But we don't really have much money to fund these operations. So we can decide that, okay, let us list our shares to the public. Now, it is only 15 of us that owns the fintech company. Are we getting it? Now, I'm just giving a breakdown so you understand why shares, companies list their shares to the public. So now, only 15 of us own the public. So that beyond 15 of us, more people can buy shares in the company. So what that happens is that they are somehow giving us their money for we to work with. Should I come again? If you are not getting, let me come again because that is the purpose of. Okay. So let me give a clearer understanding. So 15 of us, we decide to have this company, or it's a fintech company. So like I said, I'm going to give you the reason why companies list their shares to the public. Now, 15 of us own this fintech company, but we need more money, and we don't want to maybe meet investors, or investors don't want to give us money. So by listing our shares, now these 15 of us, we own 100% shares of Ore. All of us own 100%. So by listing our shares to the public, beyond 15 of us, maybe 3 million people in Lagos now want to buy into Ore company now. So they are giving us their money while using our money, while using their money to work with. That's just what happens in the stock market. So if I have maybe $2,000 in Apple shares, Apple is using my money to work. They are using my money to expand their business. And that's why, if you notice, when companies have annual general meeting, they usually invite shareholders to the meeting, because you are using their money to work. So any major decision that you need to make, you need to carry them along. Are we getting this now? So that's the reason why companies list their shares to the public, to get more funds to work. Like now, Dangote refinery is not all his money that he's using. It's not all his money that he's using. There are other investors that they brought their money for him to work with. Yeah.
Sorry, is it true that Otedela actually sold all his shares in Fort Oil and bought into?
Yes. Yes, refinery, and also no, it's Adova. Yeah, it was AP changing to Fort Oil. Now Fort Oil is now Adova. Huh? No, it was AP before changing to Fort Oil. Now Fort Oil, it has changed to Adova. Okay, I read Adova. Maybe it's the initials is AP, but the former AP is African Petroleum. But now it's Adova. I think Adova PLC also. But that is the reason why companies list their shares in the company. So if I have $500 in Tesla, it means Elon Musk is using my money to expand the business. So as the business is growing, my money is growing. So that is just basically why shares are listed on the stock exchange. So these companies would have access to more funds to work with. So you are giving them your money to work with. That is just basically what happens. So you are giving them their money to work with. I don't know, are we clear now? Yeah, good. So, yeah. So most billionaires' wealth is tied to shares of companies, either private or public. And that is why the stock market is really, really important. So let's say, which company is, okay, I think Guerrero, that's Otedala's electricity company. I think it's private. So if Otedala wants to expand that company, he would need to list the shares to the public, so that we, the public, can buy into the shares. So we have some percentage equity. But with the popular vote, the majority carries the vote. If you have just maybe 10 shares of Tesla, and somebody has 1 million shares of Tesla, you will not have mouth if they are making decisions. Because the person that has more has higher, higher power. That is just the basic thing. That's why the majority would just have the final say.
What makes U.S. stock market different from Nigerian stock market? Is it the location where the company is in? If it is the location, does that mean that a Dangote in Nigeria here can have can be in the Nigerian stock exchange, and when maybe he has an office in the US, he can also be in the US stock exchange. So that's number one. And number two, because you're buying shares of a company, that particularly make you a shareholder that has a shareholder.
Okay, that's the two questions. Okay, let me answer from the last one. So even if you have just 1 unit of, let me say, Apple, you are a shareholder. Even if it's just $10 that you have in Apple, you are a shareholder. That is just it. There's some stocks that I had. I would talk about them later. They were to merge with another company. Because I was a shareholder, they sent me email to vote. All the way from America. I'm in Lagos. They said I should vote. And it was just little shares I had there. But because my money, like I said, these people, these companies, they are using your money to work. So as far as your money is there, you're an important person. So they had to send me mail that I have to vote for this particular decision. So like I said, that the majority would have the vote. So there was already a recommendation that, okay, this is the director's recommendation. They recommend that we should click yes and not no. So I was like, okay, the majority has already said this is what they want. I accept, I accept, I accept. I don't know how we're getting it. So even if it's just $10 that you have in any stock, you are a shareholder. It's not until when you have 200 million naira or $100,000 before you know you're a shareholder. If it's just 10,000 naira, you're a shareholder automatically. So your first question of what's the difference between US market and Nigerian markets? So one of the major reasons, differences is that Nigerian companies are listed in Nigerian markets, while US companies are listed in US markets. But there are some cases that you can have dual listings. Example now, GT Bank. GT Bank is listed in Nigerian markets, and they are also listed in London markets. And that is because they have a presence in UK. They have offices in UK. They have offices in UK. Flutterwave is funded by Nigerians, but the head office is in California, America. So they are planning to go public. So because their head office is in California, they will list their shares in US markets. So if they now decide that, okay, let us have dual listing, they can decide that, okay, we have our shares, we have listed in US markets, we can also list in Nigerian markets. You can have multiple listings in the company. You asked any question.
I'd like us to demystify this stock exchange before we move forward. Is that fine?
Yeah.
Okay, so for the stock exchange, Nigeria, for example, what are the requirements that the company must have to get into the stock exchange?
Okay.
This is looking at the companies that are bidding to get into the stock exchange. What are the basic requirements? And by requirements, I mean, can a limited company, or limited liability company get into the stock exchange?
Okay, that's good. Okay. So, like I said, Nigerian laws and American laws are a bit different. But in Nigeria, any company that you see that ends with LTD is a private company. If it ends with LTD, that is limited. So it means their shares, the company is limited by shares. Remember I said in Nigerian law, it is 50 or less. If it is more than 50, you are already going public. So that's why it is limited. It is limited by shares. So there's a limited number of shareholders required for a private company. Once it exceeds that, you are already going public. Now, if you notice, there are some companies that you see PLC. You see there's some company that ends with PLC. They are public companies. So these companies that end with PLC, they are more than 50 shareholders. Now, for a public company, there's no limit to the number of shareholders. There's no limit to the number of shareholders. You can have 100,000 shareholders. You can have 2 million shareholders. I don't know if you are getting it. So, but for a private company, the maximum is 50. Once you exceed 50, by the law, you have to go public because you've exceeded, because like I said, it's limited by shares. So if you are exceeding the limit, it means you are expanding or you want to go public, you want the public to buy into the shares of the company. Okay, no, if you want to ask 100 questions, ask, so, it's your money.
Why I asked that particular question is that there was time I was reading the biography of Total Nigeria PLC.
Total, okay.
And I saw that they got into Nigeria at a particular year, then 2 years later they were listed into the stock exchange. Does that mean that there is something they must do. Okay, so if you have a company now, does that automatically get you into the stock exchange? Or there is something, a provision you must have met?
Yes, everything has laws. And one of the laws to go public, there's a particular, it's more legal, so I don't usually focus more on that, but there's a kind of requirement for, I think, revenue but you have to state your financial, so many legal documents. So if you meet the requirements, you would list your shares to the public. But those one is too legal, so I don't usually disturb myself.
Must be running for at least a year.
Yeah.
For it to submit the financial records, the company must have projections to stay long in the market. The company must also have the ability to, or that time, they are among the top players in that particular sector. Right? So there are many other requirements also. Money must happen because they must pay for going public, and they're not going to use the money that they raise
For shareholders.
pay for that stuff. So there's a whole lot of that which usually people can also go online and check more on that.
So let's
It
see.
takes a long time. That's why
Stock in Nigeria with the highest share price is Nestle. And Nestle share price is about, average, about 1,500 naira per share. So you can see that the biggest, the stock with the biggest share price in Nigeria is not even up to the lowest in. So it's more like Nigerian's roof is US foundation. I don't know if you get the explanation. So there are so many differences. You're already making money in Naira, you're already in Naira, you're living in Nigeria. Put your money to work elsewhere. No. Okay, I said penny stocks are stocks that have a share price of $5 per share. So with that means that if you want to have one, let's give an example, or our fintech company is already public in the United States market. So Ore's share price is $5. So if you want to own 1 unit of Ore, you have to purchase it with $5 because that is the share price. So if you need more units, you would pay more. So example now, Ore is trading at $5. So if you say that, okay, I want to put $500 in Ore. So it means you have 100 units of Ore. I don't know if you understand. Are we clear? The share price is $5. So if you use $5 to buy, you have just 1 unit. But if you use 500, you have 500. So let's, like I said, what are the reasons why people invest in the stock market? Now, the global equity market is valued at $95 trillion. Don't bother to do the exchange rate, your phone will just off. Sorry, I have the presence of Mr. Solomon King. He's my Oga, he's my mentor, he's a very big man. Different countries. In Nigeria, it is called the Nigerian Stock Exchange. In US, it's basically the New York Stock Exchange, but there are different, I'll go to that. In UK, you have the London Stock Exchange. So all the countries in the world, the value of all the companies listed everywhere is valued at $95 trillion. Like I said, don't bother to do the convert it, your phone will just off. Now, out of this $95 trillion, more than 55% is based in the US. So the US market controls over 55% of the global equity market. Yeah, almost 60%. So that is to show you how important it is because it's the largest economy in the world. So out of 95 trillion global equity market, the US is controlling 51 trillion. That is really huge, more than half. That is really, really important. Then also 55% of adults in the USA have money in stocks. Now I'm giving you the reason why people invest in have shares in companies, why they invest in the stock market. More than half of adults in the USA, they have money in stocks. So if these people take these things serious, then you should know that it is really, really important. So I would like to pause a little bit because my mom is around and my siblings. So you should know that it is really, really important. These people take these things serious. Now, another reason why people invest in the stock market, I can break it. Now, this is just my own calculation. These are 3 main reasons why people have shares in the stock market. One is security. They want to have an edge over inflation. Another thing is bills. There are some people that they earn their living by trading stocks. It's more like a business to them. They don't have any other work. That is what they do. That's what pays their bills. That's what funds them. And the third part is luxury. This is the part I like. Remember at the beginning I said, what do you really want out of life? Remember that's what I started with. I want the luxury part. And I know that billionaires, they have many, like now, Otedola a few months ago, he bought Ferrari for all his daughters. It's because he has an asset that can pay for those luxuries. He already has an asset. So it's not that he's now looking for, how much is Ferrari? Okay, I don't know the current price, but let's just give example, maybe $200,000 is Ferrari. There are 3 daughters, that is about 600,000. He was not saying, 600,000. How do I make 600,000? What do I? He already has assets that funds all these things. So you can just say that, okay, 600,000. You remove money from wherever, whether it's investment or shares or personal accounts. So me, I like the luxury part. I don't like the bills part because the bills is a bit somehow technical. It's really, really technical, and that doesn't suit me. So I can make money elsewhere. Let me be investing to have the luxury part. Now, this security is more like the basic. It's more like the basic, but I'm like taking a step further. Beyond the security, beyond the edge over inflation, let me make, because I'm still young, I'm just 25, but I want to have assets class such that even for my wedding, I don't have to think about money. Like I said, what do you really want out of life? Me, this is what I want, and I'm working towards it. So if, for example, if my wedding would cost maybe 10 million naira, for example, at a stretch I would be like, okay, let me remove 5 million naira worth of shares that pays for that. So I don't have to start thinking and working extra to, because that is what I want. There are some people that the money for their children's school fees is from assets. They don't bother to think of any other thing. How much do you want? Is this amount? They just remove it from somewhere. Example now, if I have, for example, I have maybe $10,000. No, let's say $5,000 in Tesla, for example. And my Tesla shares, maybe I've been holding it for some years. That $5,000, it has increased, is now like maybe $12,000. So I have $7,000 profit, right? Right? So out of that $7,000, maybe I now want to buy iPhone. Maybe by then it's now iPhone 15 or iPhone 20. Maybe iPhone 20 is now maybe $1,500. And I feel that, well, I like an iPhone. Let me get an iPhone. Instead of me now thinking that, let me work to get $1,500, I'll just move shares from there, just move out of it. I buy. And that is how billionaires live their life. They don't have to work every time to get money. They already have assets in different places. So these assets fund their liabilities. That's why these people, they can easily afford to buy private jets. Private jets is not biz. There are some people that they have 2, they have 3. They don't have to work every time to buy the private jet. They already have the assets already. They've already created systems in place that, okay, I have the money. Let me enjoy my life. Let me buy this. I don't know if you are getting me. Are we getting me? So history of the US stock market. Now, this is to give you an idea of how long this market has been existing, so you know what you are putting your money into. Something that has been existing before my great-grandfather. Now, the New York Stock Exchange has been existing since 1792. So you know that the stock market is not something that will close up tomorrow. It cannot. It will only close up if there's no company existing again. Because like I said, in the stock market, these companies list their shares to the public. So if there's no company existing in the world, there will be no stock market. Okay.
What happens when cryptocurrency takes over?
Okay, I'm coming to that. I'll come to that. Just remind me. So there are 3 different indexes in the stock market, and they have different functions. I'm going to talk about that. Now, this index is more like like a tracker, more like to track the progress of a particular group of stocks, a particular set of stocks. Okay, let us have an index that would track maybe manufacturing stocks. So if we want to know how well manufacturing companies are doing, how they are faring in the US market, we can just look at this particular index. They will have an idea of how this group of stocks are great. So the first index is the Dow Jones. I'm sure many of you might have seen this somewhere. Dow Jones. It has been existing since 1896. So you should know that the stock market is not a get-rich-quick scheme or something. They're actually businesses. Like I said, the stock market is just a market where you buy shares of companies. So these companies are actually normal businesses that we run. Tesla is a business. Apple is a business. They manufacture iPhone, Mac, and some other products. So these are actually business. So once you understand that the stock market is actually a business, you would have more understanding, and you would know that this is not just because in business, okay, I'm a Tony Elmelu beneficiary, and one of the tax that they gave us is something that they call seasonality. In business, you cannot have 100% all through the year. No matter the type of business you have, there are some months that you would have low sales. There are some months that you would have high sales. Like now, if you have a company that manufactures maybe sweater, for example, you will make more money during winter, right? During summer, you will not really make more money because people don't really need sweater during summer. So if during summer now, maybe you're at a loss or you're making little money, you will not say because you're making little money in summer, you now close your business. And that's why the stock market is always somehow like this. That sometimes it will go up, and sometimes it will go down. So you need to understand why it is going up, why it is going down. We will come to that. So the S&P 500 has been existing since 1957. The NASDAQ has been existing since 1971. So now we are going full deep into the business of the day. How do you make money from the stock market? How do people make money? There are 2 different ways, 2 major ways to make money, either through capital appreciation or through dividends. Now, I'll give an example of what capital appreciation is all about. Let's say our Ore company now is manufacturing this glass cup. Or let's say I want to buy this glass cup. I buy this glass cup for $20. Please, I will not be mentioning Naira again while you're doing dollars. So I bought this glass cup for $20. Now I decide to sell it for $45. How much profit do I have? So if I buy this for 20 and I decide to sell it for 25, then I have 20. And I decide to sell it for 45, then I have $25 profit. But if I buy this cup and I don't want to sell it, but I want to be renting it out. So maybe Ore is having a function. He's already a father. He wants to do naming for his daughter. she's having maybe birthday party or something. Now, already needs cup. I can be renting it to him and be collecting rental income. So I'm not selling everything to him. So I bought the cup, but I bought it for $20. So I can decide to be maybe renting it for maybe $5. Because, you know, let me give another example. Those that build house, we have so many real estate people here. So if you build a house for, let's say, 20 million, I said I don't want to use dollars, I don't want to use naira. So let's say you build the house for $200,000, for example. Agree with me that you cannot be renting that house for $200,000 every year. The amount you use to rent it should be way less than this. So maybe you are renting it for, example, $5,000. It will take many years before you can get the money that you used to build the house. Are you getting it? Now, if I build that house for $200,000 and I decide to sell it for maybe $1 million, I have a gain of $800,000. So these two examples are ways you can make money. So it's either you buy shares of a stock. Let's say you buy Tesla stock for $20, for example. And Tesla has already increased to like $50. And I decide that, well, I'm okay with this profit. I want to sell it. You've made $30. But if you decide that, okay, I don't want to sell this stock, I want to be receiving dividends, definitely Tesla will not be paying you $20 in dividends. It will be way, way less. It can be maybe 0.5, or it depends on the dividend yields. Are you understanding me? So those are the two ways you can make money from the stock market. Now, why do companies pay dividends? Because it's not every company that pays dividends. Most tech companies, not all, most tech companies, they don't pay dividends. So how these companies, shareholders make their money is by trading the stocks. Maybe they buy it and they hold it for some time, it appreciates, then they decide to sell it. Tesla doesn't pay dividends. Netflix doesn't pay dividends. Now, this is the reason why these people don't pay dividends. Remember I said that stocks are actually companies, and they list their shares because they need more money to expand their business. So if they've already made, maybe they made $100 million in this first year, they can decide to now put, instead of paying out, because dividend is more like you are paying little profits. That, okay, remember I said that those companies listed on the stock exchange, they are using your money to fund the business. So they can decide, okay, instead of we paying part of our profits, because that's what dividends is, part of the profit. So maybe we made $100 million. So out of this profit, let us pay a little to our shareholders so as to encourage them, okay, or thank you for giving me your money to work. Take this small, just to encourage that, okay, I'm still using your money to work. Your money is doing well, the business is doing well, just hold this. That is just in basic basic expansion. That's the importance of dividends. Should I come again? If you need me to come again, I should come in. Okay, that paid dividends. I will get to that. Just want to give this explanation. So instead of these companies paying the dividends to their shareholders, they would reinvest it back into the company. They will reinvest it, so they are not paying out dividends to their shareholders. Like, okay, just I want to hold on to this money and we'll invest it back into this business. So the more the business expands, the more the value of your money there. That's why there are some companies that you can see that your stocks has increased by maybe 200%. There's sometimes that you see 300%. There's a particular stock between March last year and now, that stock has increased by 10,000%. You can check it out. Just go to Google and type Mara. Mara, you see it. It has increased by 10,000%. So imagine if I put 1,000, I don't want to scatter my head with maths. So that is the difference between capital appreciation and dividends. So those are the two major ways companies list their shares in the public. So now the major part is, why does shares rise and fall? There's sometimes that you buy a stock and you see that the value of your shares has already reduced by 5% or 10%. There's a factor that makes it that way. At times it has increased by 30%. There's a reason, it's not just magic. So everything is all about understanding. When you understand, you will not be scared that, okay, you're so, because me, I don't like helping people to invest, especially when they have access to their portfolio. I help them to buy stock, then I say, Nat, my money is already reducing, this. I give me stress. Your money will surely reduce. Your money will surely reduce. Like I said, no business makes 100% every time. There's sometimes that you would encounter loss in the business. There's sometimes that you make more money in the business. For entrepreneurs in the house, you can bear me witness. It's not every month that you like total cash out. Am I right? Even banker, it's not every that have that understanding. You will not be disturbed about why. So there are two reasons why that affects the shares, why shares rise and fall. I'll write it here. One is fundamentals. While the second one is technical factors. These are the two main reasons why share price, at times you see that it has increased, at times it has decreased. The first one is fundamentals. Now, fundamentals is, in my own basic explanation, it's more like I call them internal factors. I call them internal factors in the sense that whatever affects the stock of that company is based on the management team. It's based on the management. Part of the fundamental factors, you have management. Another one is, let's say, product launch. Another one is price earnings. Let me say earnings. Let me explain these three. The management business. So if the person that is the CEO that is calling the shots doesn't know what he's doing, it will affect the entire business. Am I right? It will affect the entire business. He will not know how to generate more revenue for the company. One of the reasons why Tesla is hugely popular is because of Elon Musk. Not necessarily because Tesla is Tesla is a good car, but the majority reason lies on the management. I can bet you today that if Elon Musk should decide to resign from Tesla, Tesla stock will go down. Like it will crash. It's not even go down, it will crash. Because people are buying Tesla stock because of Elon Musk. Because they believe that Elon Musk cannot make mistake or he knows what he's doing. Like the co-founder of Flutterwave, Ian Aboyeji. If Ian should maybe found another fintech company and it is now public, many people will buy it. So they may not even really bother about what the company does, but they feel that as far as Ian, that is the CEO, that is the management, this company will do well. No matter what, this company will do well because this guy has a good track record. These are one of the factors that, there was one time it was reported a few years ago that they caught Elon Musk who was smoking on camera. Just because he was smoking, Tesla stocks went down. Just smoking, no. They saw him smoking, the stock went down. Remember I said that people are buying Tesla because of Elon Musk. So anything that he does or says will affect the company. 2 years ago, he tweeted that in his opinion, Tesla stock is too high, that the share price is too high. Because of that tweet, Tesla stock went down. It actually went down because he just tweeted that it is too high. So management affects this share price. There was one stock, one company, Virgin Galactic, it's like a space company. Because they announced that they are appointing a former CEO, a former executive of Disney. Just because of that announcement, Virgin Galactic stock was going up. Just because they announced that this guy will not be our CEO. So perhaps there's one thing about the guy that investors believe that, okay, since this guy is here, something good would happen. During 2019 election, I don't know if you guys heard about it, there was whether one rumor that whether Otedola, whether PDP wanted to bring Otedola to run for governor. Just because of that quote-unquote rumor, Fort Oil was rising. Just because there was a rumor that PDP can bring Otedola to, then Otedola was still the owner of Fort Oil. Just because of that, Fort Oil was going up. Because investors have that way that if the owner of this company is not the governor, it means this company will do better. Am I right? There will be maybe more government contracts or more deals. So with that, like, there's more money to be made. Remember, everything is all about business. The stock market is just all about business. Less for me, the best investors in the stock market are entrepreneurs. Because they didn't know how business operates. They already have the mindset of it. They know how business operates, so they know these critical factors. Now, another thing is product launch. Product launch. Remember I said companies on the stock exchange are actually businesses. So Apple, for example, they are manufacturing iPhone. What will make Apple to grow better is if they are making more money from their iPhone sales. And the public has to buy. Because if the public doesn't buy, they will not be making money. Are we getting? So if Apple releases a maybe rubbish iPhone, because investors know that this iPhone is low-level iPhone, people will not buy it. I'm disappointed in Apple. The stock will go down. Because it did not appeal to the public. And they know that since it's not appealing to the public, people will not really buy. They will maybe make lower sales than before. So it will affect the stock price. So whenever you see a stock going up or down, it's not just magic. Basically, everything falls on demand and supply. When there's more demand for a stock, the stock will go up. And when there's less demand for the stock will go down. Remember I gave the example of that former Disney executive. Because he was appointed as the CEO, people were now demanding the stock for that Virgin Galactic stock. So because there's now more demand, the stock would go up. It's just basic business. If, perfect example, the sweater example that I gave. So we are approaching summer. If I should buy, because we are approaching summer, there will be less demand for sweater. So I can get sweater for maybe, example, $20. Remember I said I'm not using Naira again. So get used to it too. So let's say I buy sweater for $20. Because it is summer, there's no demand. By the time winter comes, there's more demand for sweater. So sweater can be selling for maybe $100. Not because there's any magic or something, but because there's now more demand for the sweater. When there's more demand for something, it increases the share price. Before Corona came, did anybody know about Zoom? Why? Because there was really no demand for video conferencing. There was no pandemic, so everybody could meet. You as a banker, if they need you for work, you have to report to the office. You cannot be at home and say, I want to do. There was no really demand for that. But because the pandemic came, people could not move. So, and this Zoom company, it has been there since, nothing happened. Because there was no really demand for their services. People did not really need to be doing video conferencing. If you want to meet anybody, you have to meet physically. But the pandemic came, people could not meet physically. So they needed the services of Zoom. Everybody here, you've used Zoom during Corona. Abi? And because they're using Zoom, Zoom is making more money. Remember I said everything is business. The stock market is just companies. Because they are using Zoom, Zoom is making more money. With that, they are making more money. There's now demand for Zoom stock. If you go to Google, just type Zoom. Look at the 1 year chart. You see how it has increased in the past 1 year. Zoom was one of the most popular stocks last year. Now, remember I said at the beginning that Nigerian stock market is somehow. Last year, Zoom alone, just one company in United States market, just one company, it was 3 times more valuable than the entire Nigerian stock market. Just Zoom. We are not talking about Microsoft though. If you talk about Microsoft, maybe it will be Nigeria plus Ghana plus Rwanda. Just Zoom. We've never talked about Apple, that is the most valuable company. Just Zoom was 3 times more valuable than the entire Nigerian stock market. That's why I don't like Nigerian markets. If one company can be 3 times better, then what of those are the top? So, earnings. I'll try to, earnings, like I said, it's all about business. So when our other fintech company, if we are now making more money, investors will feel that this company is really doing well, they are making more money, they have good prospects, there will be more demand for Ore stock. Because people want to buy into the progress of Ore. Do you understand? Huh? So because Ore, our fintech company, is making more money, it is already public. So because we are making more money, we are doing good, the business is expanding, investors will now want to buy into the stock. So there will be more demand for the stock because we are making more money. So people want to give us their money to work with. People now want to give us their money that, okay, I want to buy the shares of this company. I'm investing in it. Now, technical factors. They are more like, I call them like external factors. This one, whatever the management does, doesn't really matter. This one is more like, quote unquote, village people. So there's nothing you can do. Like, it's not within your control. One of the things is economy. The economy of the country. Now, the CEO of Apple cannot directly dictate the economy of the United States. It's only the economy of Apple that he can influence. So if the economy is doing bad, it will be affecting most companies. I don't know if you are getting me. Because the economy is really doing bad, it will be affecting the company. And that's one of the reasons why most Nigerian shares, I don't know, some of you might have had horrible stories of maybe your uncle or your father or something that they bought shares before and now it is crashed. One of the major reasons is because of the economy of Nigeria. People don't want to put money in an economy that is not stable. So if the economy is doing well, it will also affect shares. That's why there's something that we call bull market, bear market. So this bear, it signifies pessimism. Like people are anticipating that a stock will go down. While bull, they are signifying that things will be better. Remember I said it's all about business. You cannot be 100%. Now, if a company, if throughout the year, your company is not really doing well, nobody wants to buy shares of your company. So if you are making losses upon losses upon losses, nobody will answer you. Nobody wants to give you their money because they are making losses. But if you make more money than your losses, people will give you because you cannot just be making. That's why in business you have expenditure, you have profits, there's revenue, and there's profit. So once you make money, they remove the expenses. You have to pay salary, you have to pay tax and everything, then the profits. So if you are making more profits, investors will be happy. And share price would be going up. So the psychology of markets. Please, what's time? Huh? Okay, I'll try. So the psychology of the market. Now, this is the most important part of the stock market entirely. If you don't understand this, no matter what you do, it's rubbish. Because the stock market is largely psychological. than logical. It's more about emotions. That's why I said I don't like helping someone to invest. Because once I see that their stock is going down, they don't know why it is going down. So it is, they know themselves. Some of them are here, they know themselves. So the stock is going down, what is happening? The market is largely emotional. That's why you need to keep your cool. You need to keep your cool. I will come more to this. Now, investors' demograph. Now, this is very important. Remember I talked about capital appreciation and dividends. Now, these capital appreciation stocks, they are very volatile. They are very volatile. Volatile means you can be seeing sharp increase, sharp drop, sharp increase, sharp drop, sharp increase, sharp drop. Because they are still kind of growing. Remember I said most capital appreciation stocks, instead of paying dividends, they reinvest back the money into the business. Tesla is still growing because we've not really entered the phase of electric vehicles. So it is still growing. Because it is still growing, they cannot afford to be giving out dividends. Another way to understand dividends is more like promo. Who is an entrepreneur here? You have a business. So if you are a startup now, you are still trying to grow your business, can you afford to be doing promo every time? You can't afford to be doing promo every time because you need as much money as possible to grow your business. Once your business has now grown well, you can now be like maybe Dangote or Dano. You will now do season of surprise, maybe MTN, season of surprise. You are now giving out freebies, you are doing promo, you are doing discount because you've already made more money. You can afford to, more like to appease the public because you see this public that will buy your product. Remember I said everything is business, they are companies. They still have to buy your product. So it's more like, okay, let's do promo. That's the major reason why companies do promo. Not necessarily because they want to throw money away or so. More like to appease the public. More like to appease them, okay, there's now promo for this product. People will come and buy it. They'll now do photo, now turn it into like a fun fair. People will be happy. People will now be using the product more. Everything is all about marketing. It's all about marketing. So investors' demograph. Now, their recommended age demograph to the stock market. 45. If you are less than 45, most people here are less than 45, apart from my mom. My mom will soon be 60. She's a big woman. It means for me to turn out to grandma. Don't worry, time is coming. So, if you are less than 45, it is recommended that you focus more on capital appreciation stocks. Someone that, okay, Tosin cannot compare her energy to my mom. Or my mom cannot compare her energy to Tosin. Tosin is still much younger, so she can afford to do some kind of energy stuff. But my mom is quite elderly. She doesn't really have time for, there's a limit to, there are some things Tosin will do that my mom cannot do. Not because she cannot do it, but she has already passed that age limit. So she can't afford to be doing some kind of things. Now, because capital appreciation stocks are volatile, you can't expect someone that is 60 to be putting their money in Tesla for the first time. They can die of heart attack. Yes, because they will now see that Tesla has already reduced by 20. They're like, 20%. But someone that is, me myself, that I'm seeing, even if Tesla, I still have the energy to whether make more money and everything. So dividend stocks are mostly suitable for people more than 45. It's more like a recommendation. Now for dividend stocks, you can't compare the profits of dividend stocks to capital appreciation stocks. There's one dividend stock, I can't remember the name, I think it's Coca-Cola also, I can't remember. For the past 5 years, Coca-Cola has not gained more than 50%. Sheikh can help me to confirm. Either Coca-Cola or there's one dividend popular stock. It has not gained more than, like the shares has has not exceeded 50% growth in the past 5 years. I can't remember the stock, but there's one popular stock like that, either Coca-Cola or so. The growth, why? Because it is a dividend stock. So dividend stocks are most stocks that are like they've been existing. They are not volatile. So like they've already made their money. So the growth is not like they will not be growing. No. They are still growing, but the growth is minimal compared to capital appreciation stocks that they still need the appreciation stocks. Not like you cannot get dividend stocks. So you can get dividend stock, but you still have the energy to, like the risk appetite, let me put it that way. You can still take more risk than someone that, most people that I call dividend stock like pension stocks. They are more like pension stocks, like if you already made your money, just put it there to be getting your little returns, something like that. So, should you trade or should you invest? They are two, like somehow similar, but they are different. Should you trade or should you invest? Remember I said that there are different reasons why people put their money in the stock market. Some is to pay their bills. Remember I said this is to pay their bills. So if you are in the market to pay your bills, you need to trade more than you are investing. So trading is just like the typical market, buying and selling. So you buy a stock, it gains a particular percentage, depends on you if you are comfortable. You sell it, you make some profits, you buy again, you sell, you buy again, you sell, you buy again, you sell. You are trading. You are buying, selling, you to gain a little bit, you sell, depending on your risk appetite. Because you need, example now, you cannot buy a stock and you are holding it for 1 year if you want to pay your bills. I don't know if you get it. You need to pay your bills, so you need to cash in some profits because you need to pay your bills for whether monthly or weekly, depending on how your bills are. But someone that is not in the market to pay bills, you can afford to like hold on to that. There's one guy on Twitter. The guy has been holding his Tesla shares for the past 6 years. Now the value of that his shares is now over $1 million for the past 6 years. Remember I said Tesla just within 1 year it has gained over 470% in the last 6 years. So now that person doesn't really need Tesla stock to pay his bills. Because we really say that he has not paid bills in the past 6 years. So that person now probably is not in the market too. There's some people that are full-time traders. You will see they are big. You will think they're even gambling. You see like 2 or 3 different monitors. You see the chart, everything. Then balancing long-term and short-term. I got my Oga, Star Solomon King usually say that time in the market is better than time in the market. And that's where people usually make mistake. They are trying to time the market, like predict. That's why at times people will ask me that, I want to start buying stocks, how many percent can I earn in a... I don't usually answer it because you are trying to like time the market, okay, I want to make maybe 20%, I want to make 50%. When you do not make that percentage, you are now, the psychology part now takes place. You are now more emotional than you used to be. So balancing long-term and short-term. It is best said that the longer time you spend in the market, the more your profits. Remember I said companies are actually businesses. So a company doesn't just end because they've made $100 million this year. And I say, $100 million. We are doing good now. Let us pack. We vended the company. No. They will continue. They will continue. They will continue. Warren Buffett, that is one of the richest person in the world. He has been investing for decades. The more time you spend in the market, you'll be rewarded than you trying to time the market like predict and everything. Because you will not be right every time. You will not be right every time. And that's why me personally, I don't really like trading. I'm not in the market to pay bills because at times you will not be right every time. You now have to be cutting your loss and it's too emotional, like it doesn't just fit me. So I'm not doing that. So balancing long-term and short-term. Like I said, the longer time you spend in markets, the better for you. So you should have the long-term focus in view. Any investor that knows what they're doing, they will tell you that long-term is the best strategy. Because like I said, in business, you can't have 100% profit every time. So there are sometimes that the business will be down or there will be less demand for the stock due to one reason or the other. But when you now wait a bit, there will be a period that there will be more demand. So the more the good, when the good is more than the bad, it increases. If you check the Dow and the NASDAQ that I talked about, if you look at their charts, their all-time chart, you would see like this. It is increasing. That is the all-time. But if we break this all-time chart into maybe months or weeks, at times you see like this. You'll be seeing like amoeba, jiggy, jiggy, jiggy. But in the long term, everything compresses and it is growing. Now, because you have the long-term view in mind, doesn't mean you cannot take advantage of some short-term stocks. But when you focus more on the short term than the long term, when things are not going your way, you start getting way too much emotional. Your psychology is not taking over you. You are not thinking again because you are making the loss. Your head is everywhere. Yeah, they complain that 20%. There's one of my stock presently. I'm at a loss of about 40-something% presently. I still have that stock. We'll come to that later. So when you have long term, like, let me talk more a bit on the short term. There's this company, Coinbase. I don't know if anyone knows about it. They are a cryptocurrency company. It's the largest in US. They are coming public on April 14. Remember I said one of the reasons why companies come public is to list their shares for people to buy into it. So because it's the biggest cryptocurrency company in the world, right now, currently, Bitcoin is already like $61,000. So by the time Coinbase becomes public, there are some other stocks that are crypto-related stocks. They somehow deal with Bitcoin and crypto. Because Coinbase would come public, because it is like the largest, it would affect so many other crypto stocks. So within that period that Coinbase will be public, some crypto stocks can increase by 20% in one day. They can. Some 10%, some 15%. Remember I said Mara is a crypto stock. Between last year and now, 10,000% increase. 10,000%. There's another one, Riot, I think 8,000 or so. So because of this Coinbase, so many crypto stocks would rally with Coinbase because like there's much enthusiasm that this company is already becoming public. Everybody wants the company to be public. So there'll be more demand for the stock. And because there'll be more demand, other related stocks would be rallying. So because you have a long-term mission in view, doesn't mean you cannot take advantage of the short-term benefit that will happen next week. So you can, they are not public now, today is 10, Monday will be 12. So you can decide that, okay, Coinbase will be public on Wednesday, 14. Monday is 12. You can decide, okay, I want to buy this crypto stock because I know that Coinbase would come public. By the time Coinbase become public, as it's going up, this one I can gain like maybe 15% or 20%. Now, because this rally is because of Coinbase, by the time all the whole quote-unquote hype goes down, the 20% that you've already gained, it will start coming down. So you can now cash in the profit that, okay, I've made good 20%. That is a short-term benefit. So because you have the long-term in view, doesn't mean you cannot take advantage of the short-term stocks. I don't know, are we getting it? Okay, very good question. Now, it's not like it is a short, it's not like that company would not do well in the long term. But because there's, which example will I use now? Okay, let's use, for example, let's say Davido is coming to Ikeja. If everybody knows that Davido is coming to Ikeja, Ikeja will be flooded with people because everybody wants to see Davido, right? So if Davido is to come to Ikeja on Monday by maybe 12 p.m., Davido would be in Ikeja City Mall. By 8, you start seeing crowd waiting for Davido. By the time Davido comes, he performs for maybe 1 hour and he goes. After that, he has already performed. People will be leaving because they came to witness Davido perform. He has already performed. I've enjoyed myself. I will go.
At that point, you know the transport, this bus with the might.
Thank you. That is another business. Transport, because they know that, public, this downfall, they just do that, okay. They know that everybody wants to come and see Davido. Bus that is maybe 15 naira, they'll start saying 200 naira. If like enter or don't enter, they'll move. Uber that will take you maybe 800 naira, between maybe Maryland to Ikeja. Because there's more demand for Uber at that time, you can see 2,500, 3,000. Most times on Sunday, Uber the price usually go up because there's more demand for Uber, especially after service. Everybody wants to. So the price that is supposed to be 1,000 naira normally, it can increase to like 1,500 because there's more demand for it. But if there's less demand, it can remain at that 1,000. That is the same thing that happens in the stock market. Once there's more demand for something, the price would go up. That is just it. I don't know, are we getting it? Then, the money is in the volume. I'll give another example. The person knows themselves. So if I buy a stock, let's say that our Ore fintech stock is trading at $5, right? Our example, I said that our Ore is trading at $5, Abi. So if I buy 1 unit of Ore, so I just have 1 unit. And Abraham buys 100 units of Ore. I have $5 in my portfolio, right? Ore has $500 in his portfolio. Am I right? So if our Ore stock increases by 100%, for example, 100% of my $5 is now $10. Abi? While Abraham's 500 is now $1,000. But both of us bought the stock at the same time. Both of us bought the stock at the same time. And the same stock increased by 100%. Why did Abraham have $1,000 and I have $10? Eh? People should answer now. Yeah, because Abraham has more units of Ore. We got the same 100%. But because he put more money, he has gained $500 extra. But me, I did not put much money. I just gained $5 extra. So the more money you put in a stock, the better your profits. Are we getting me? The more money we put in a stock, the better your profits. So the example of the person I'm talking about, the person bought a particular stock with, I think $12 or so. Now the stock gained 83%. But out of our $12, our profit was just $8. Now, had it been that same stock, maybe the person puts $1,200. The person now would have, let's say $1,000. The person now will have $830 in profit. Are we following? There is no magic. It's because there's more units of this stock, there's more money. So the more the money, the more the profit. So the money is in the volume. Somebody that has $1 million in a stock and another person that has $100 in a stock, if that stock gains 20%, you can't compare the two profits. Am I right? And there's no magic. It's because there's more money somewhere else than this. So it's okay to start small. As a matter of fact, although, Nigeria has already placed a kind of ban, but let's hope that everything will be settled. There are some platforms that, the platform I use, The minimum accepted is just $20. That's about 10,000 naira. So with 10,000 naira, you can start buying shares in any stock market with just 10,000 naira. So it's not until when you have 2 million naira before you start. It's better to start little than start growing it gradually. Than for you to, you don't test the depth of the water with your 2 legs. You go little. Okay, I'm enjoying it, okay. The more you now be putting your full, then you now be able to. But you've not, is this swim or this one? You shall understand, you've not entered, you've not done it before. You are now going to lagoon. You've not entered water before, your first time of entering water is now lagoon. Now that you do. But when you start with your bathtub, you start doing small. Before you know it, you go to swimming pool, maybe 4 feet or maybe 2 feet. You start going small. Before you know it, 6 feet. You are now getting more exposure, 12 feet. Before you know it, you can decide to all those Olympic-size pool. You are getting used to it, then you can now start to go to lagoon and co. You are now enjoying, you are now an expert. But the first time you want to start swimming, you are entering lagoon. And that you did. So, quality over quantity. These are the mistake that people make, especially those that are starting just small. You cannot have $100 that you are starting with and you have 35 stocks. Yes, you just $100. You use $100, you just spread it like a chicken that is laying different eggs. You now be seeing that you have maybe $12 in one stock, you have this in one. It's not by having plenty. It's in quality. You can have just 4 stocks, 4 very good stocks, and those stocks will do perfectly well. And you can have 100 miserable stocks. So it's not by carrying plenty, it's not about quality. Quality over quantity. Look for quality good stocks. We'll talk about how to identify them. Now, follow the money. Follow the money. I would cite a story, and I'm sure many people would relate to it. So, sometime many years ago, I went to buy a sneakers for, I think it was for my brother, Jeff. So, it was at Marina, I think Balogun Market or so. I went to buy the sneakers. It was nice, carton color. It was nice, good. I bought it. But I think about a week later or 2 weeks later, because I snapped the shoe. So I now went back to the market and I went to meet that guy that, give me this shoe. The guy said that the shoe is not available. I said, why? And I said that, you know the market again. Nobody waiting the rain again. I don't know if you've gone to market, you've heard this thing with Igbo boys. They will say, nobody waiting the trend be this now. This one, they buy now. Because these guys, they are following the money. So they cannot be having goods of a stock that is not moving the market. So they move to what is moving the market. That's why they're always all about money. It's whatever that is selling that they move to. Not like they are just everywhere, but they are following the money. Where the money is, where there's more demand, they are buying. So you need to follow the money. Now, you need to know what the G7 are saying. Because these are the people that control the entire world. Whatever these people conclude on, it will affect the world. Now, G7 is group of 7. Group of 7, they are like the most important countries in the world. Like these people make the big decisions. You have US, UK, Canada, Germany, Russia, France, and I think Italy also. Yeah, Japan. So whatever these people say can affect the market. When Donald Trump was in power, I think, okay, before Donald Trump came, it was Obama. So Obama with the US, they signed one Paris climate deal. I don't know if anyone heard of it. Paris climate deal that, okay, the world is moving towards renewable energy, electric and everything. They signed the deal. Trump came into power. He said he doesn't want that. Trump is a kind of hydrocarbons. He believes in the fossil fuel. So he scrapped out that deal. So he was favoring the oil companies and everything. That is his own style. Now, Joe Biden has come. He's following his mentor. we are scrapping out hydrocarbon, we are going. So within those 3 years, those 3 tenures, the market has been having different issues. Because when Obama was in power, the renewable energy and green sun, because that is what the world is moving towards. There's more sentiment from the investor that, okay, let us go to this. There's now demand for those stocks that are renewable energy. Now, Trump came, he scrapped that out. Those stocks are going down. Because this person is the one in charge of power. He's the one in control of everything. Like, whoever is the president of the US is more like the president of the world. Because they are the world economic, they are the world power. So he came, he scrapped out all those things, he was favoring hydrocarbons. There's this particular stock, fuel cell. It's a renewable energy stock. You know, Trump left in, the election was October. Yeah, October, November. Before then, the stock was trading at $2. It was low because the person in power did not favor that type of business. Now, Joe Biden, during the campaign and everything, he had already made this promise that he's going electric, he's going renewable energy. So because he won the election, there was massive demand for that stock. Because they know that that company would do well during this administration. The stock went like it was going up crazy, because there was more demand for the stock. Everything is all about demand and supply. So you need to know, once you start investing in the stock market, you would appreciate this. You would start seeing more reasons to be following the news regularly. It's not just about going on Twitter, seeing one trend that Bobrisky is trending or one thing. You would start understanding the news better. You start following Forbes, Bloomberg, because these are the outlets that discuss about things that affect the market. So once you start knowing what the world leaders are saying, you would know where the direction of the world, where the world is going. Then you will know the companies that would be in demand because of this particular policy or something. Are you understanding? So if the world leaders are saying that the world is going this way, and you are buying stocks that are going this way, you'll be losing. Because there's no demand for stocks going this way, because the people that are calling the shots, they are saying this is where we are going. So you need to align everything to where they are going. So you need to follow the money. I would pause here for a break, because my mentor is around, Mr. Victor, I don't know, Francis, and he's going to take the financial management session, and that will be after tea break. So in case you have any question, you can just pen it down and we'll talk about it. So after he speaks or take over. Thank you. I hope we're learning something. You want to be... So the ETF would help to minimize your risk, because there are sometimes that, example, Abraham, Tosin, and Michael, they're in the same industry. And remember I said the fundamentals can affect a stock. So maybe the management of Abraham, they are misbehaving. For example, the stock is going down. Maybe it's now like 10% down, for example. Tosin's company, the management have sense, they are doing well. The stock is like maybe 20%. Michael's one, they are neither here nor there, like maybe 5%. Now, before that happened, you don't really know which one. So if you bought Abraham, for example, now, the stock is already 10%. And you now see that Michael is 5% increase, Tosin is 20% increase. But if you bought the ETF is more like, there's this thing that they call a mouse, I think mean media mode or something. Yeah, something like average. That is somehow like what ETF is. So it tracks a particular, different stocks in a particular industry. So if you buy the cloud computing ETF, so instead of you putting all your money in Abraham, you can put your money in ETF. So even if Abraham is down by 10%, Tosin is up by 20%, market is up by 10, the ETF of these three may just be maybe down by 2%, for example. So instead of you buying ABAM and you are now 10% loss, because you bought the ETF, you are just 2% loss. It has helped you to minimize your risk because you are starting out, you want to test the waters. Now you've already tested the waters, you feel that, okay, let me go further and everything. Maybe you are now having more funds, more money and everything. Now, okay, let me fully explore. Then you now analyze ABAM again and see that ABAM is actually a very good stock, that maybe something just happened and is down by 10%. Can I decide that, okay, I trust ABAM, he has toasted me, he has told me about his plan, yes, he wants to travel, it suits my vibe, let me go and marry ABAM. ABAM is doing well, it's going up, it's going down, it's going up, but overall, ABAM is on a very good path. So if you don't want to start out and you don't really have much money and you want to test the waters, you can just go for ETFs, ETF stocks, or even dividend stocks, just to test the waters. But like I said, for the age demographic, we are still young, so we can still accommodate some good risk or good energy. No need to, you still get to, God willing, you still get to the old age and you'll not be able to take the risk. So now that you can take the risk, enjoy it and grow your money. I don't know if you understand my question. Any? Okay, yeah.
I think the bottom line for this question is that you need to have a financial advisor.
Yes.
Right? Someone that knows this thing, right? Or people that know this thing. So because in a nutshell, there are so many ETAs out there, a lot of them are coming well.
Yes.
So before you buy this particular stuff, you don't need to go. I don't know that you want mentor, right? But you hear what I'm trying to say.
Having a community.
Yeah, being a community. Because
Being a
now
community.
Nigeria is a community of say 60 people, and you say if you want to buy shares, two things can happen.
Well, it's not really a website per se. I just go to Google, and there's this thing with algorithm. Like, if you are visiting a particular set of information or news, the algorithm feels that, okay, this person is focused, is interested in this angle. So they'll be releasing, you'll be seeing, even if you don't even click on it, you'll be seeing information related to. If you are checking Davido and Wizkid every time, they feel that, okay, you are inclined to entertainment. So if you just go to your Google Lab, you just see that, Wizkid was caught hanging out with a girl. Anything concern me, concern that one. So once you start, like, okay, maybe periodically you are checking stocks, which stocks should I buy, or cloud computing, they feel that, okay, this person is interested in stocks. They can just be giving you news that, okay, maybe Amazon is planning to expand to so company. And another way to do your due diligence is that you can just either that, example, is Amazon a good stock to buy? You can just write something like that, just Google. No, Google will be able to give you different information. And like I said, you need more than one reasons for your table. So maybe on this particular website, they talked about Amazon. These are now talked about it. You are reading. Once you read, you can be able to collate and filter the noise that, okay, this information is making sense. You check this one again. This person is talking from this perspective, this person is talking from this perspective, this website is talking from this perspective. Once you collate everything, you can now come to a conclusion that, okay, this person talked about this, he was rejecting this one thing. You can now like find the mean or the median or whatever it is that, okay, in conclusion, I feel this stock is. Now, there are some websites you can go to. Let me write them down. You'll be seeing news updates on any stock or any market information. Seekingalpha.com is a website, and they also have mobile app. Then This one is just a website. They don't have mobile app. Then I'm not really sure of this spelling, but if you just go to Google, you check you see the correct spelling. I don't know if it is, I can't remember if it is double O or double T, but once you type it, Google will give you the correct spelling. Motleyfood.com. Then, which other website? Yeah, thank you, Jerry. This one is an app, investing.com. Then you have Yahoo Finance. This one also is an app, Yahoo Finance. Yahoo Finance is another app. Then CNBC is another one. So example now, if you want to be sure of maybe Tesla, example, you can just go to this website, maybe on the search button, you type Tesla. You see different articles about Tesla, you read it, you come to this place, you read it, you come to this place. With that, you can be able to come down, okay, this person is talking about a particular, because all of them cannot just be wrong. And all of them cannot just be ula balu that this one is. There will be something that there will be like a meeting point that, okay, Seeking Alpha is talking about this. This investor place is talking about this. Monthly Food is talking about this. Then I feel convinced that this, because all of them cannot just be wrong. All of them cannot be wrong. And if all of them are rejecting a particular stock, it could be a sign that the company is not really good. It could be a sign, and in a way, it doesn't mean, like if all of them are rejecting a stock, it doesn't mean that stock will not go up. There's a particular video of Amazon, 1999. All of them were rubbishing Amazon, that Amazon is not they're just selling books. They were rubbishing Amazon. Look at Amazon today. Over $3,000. So in a way, analysts can go against a stock and the stock is a good stock. And at times they can go against a stock and indeed that stock is actually bad. So there's no one size fits all. You need different information. Information is power. So the more information you have, the more you do something, the more you understand it. The more you do something, you really, like now, if you are driving, the more you drive, the more you understand. So I don't know if you are clear now. Yeah. Okay, the emerging markets are so these are Southeast Asian countries. So this one is just like ECOWAS, Economic Community of West Africa. So it's Association of Southeast Asian Nations. So these countries are Indonesia, Singapore. These are like the two big countries in those sectors. So they are more like untapped in this the emerging markets. So these countries have really good companies with good business. So you can be investing in them. It's more like you buying a Tesla that is $10. So you are buying a stock very early. Not like early, but you are buying at a bargain. So these countries because they are really, really like very good, solid countries. I don't know if you understand now. Thank you. So that will be all for my section. To conclude, so I stopped at balancing long-term and short-term, right? So now, do you take profits or do you hold your shares? Remember I said at the beginning that if you are in the market to pay your bills, you can actually be in the market to pay your bills and 20. So if you are in the market to trade, that is to pay your bills, if you are in the market to pay your bills, you should trade 80%. 80% of your time you should be trading, while 20% should be for investing. Remember I gave the example of that guy that